Statistics Poland, or Główny Urząd Statystyczny, has published the key economic data for November 2022. Widely expected was the inflation reading. According to GUS, prices of consumer goods and services, or CPI, increased by 17.4% year-on-year and by 0.7% month-on-month in November 2022, which is lower than October readout, when prices of consumer goods and services increased by 17.9% year-on-year and by 1.8% month-on-month. Overall, Polish gross domestic product, GDP, increased by 3.6% year-on-year in the third quarter of 2022. The figure is slightly higher than the previous estimate, in which Statistics Poland said that in third quarter, growth would be at 3.5% year-on-year. In the second quarter for the year, the country's GDP rose by 5.8% year-on-year. According to GUS, third quarter investment went up by 2% year-on-year and private consumption increased by 0.9%, and domestic demand rose by 3.1% in the third quarter of 2022. Polish Economic Institute published its estimation stating that the country's inflation rate is expected to slow down in March 2023. PIE expert Jakub Rybacki commented on the inflation readout that fell from 79% in October and is much below the market forecast of 18%. In his opinion, December will bring a little change in CPI data, but inflation will rise again at the beginning of the new year and peak in February, when it is expected to be above 20% due to the reinstatement of higher VAT rates for electricity, fuel and gas. But he said from March, inflation will start to slow down, which will be the result of a drop in oil prices and a lower increase in world food prices. European Union mandated Warsaw to end the reduced VAT tax on fuels. The EU Commission requested the Polish government to abolish the practice of lowering taxes adopted last year to fight fuel prices increase. In this condition, Warsaw must comply with and cancel so-called inflation shields. Another estimation for Polish economy. Ratings agency Standard & Poor S&P has downgraded Polish economic growth forecast to 0.9% in 2023 from 1.2% forecasted in September. At the same time, S&P predicts that Poland's economic growth will accelerate to 3.2% in 2024. Our baseline assumption is weak, but still positive GDP growth of 0.9% in 2023 versus our previous forecast of 1.2%. SAP wrote in a report published on Wednesday. Once the external environment improves, the economy should regain its momentum, and we expect GDP growth to reach 3.2% in 2024. Poland's average annual inflation is now expected to hit 12.9% and ease to 6.2% in 2024 and 3.1% in 2025. The agency does not predict any further interest hikes by Poland's Monetary Policy Council to the end of 2023. Now to the Central Bank Policy. Member of Monetary Policy Council, or Rada Polityki Pieniężnej, Iwona Duda, thinks that in current situation, in light of the available data and forecast, especially the NBP inflation projection, the levels of rates is optimal. According to the interview published by Dziennik Gazeta Prawna, Duda considers further increases as leading to strangling the economy. In the current situation, she said, in light of the available data and forecast, especially the NBP inflation projection, the level of rates is optimal. The rate hikes so far are working, although their impact is not yet fully visible, as it takes several quarters. Let me remind you, Duda said, that interest rates have been raised 11 times so far. Further increases could lead to a strangling of the economy. At the moment, we can already see gradual weakening of the economy, not only in Poland, but also in Europe. This is worth mentioning that high inflation is a problem not only in Poland. In many countries, it is at levels not seen for decades. The strong tightening of monetary policy abroad will also have an impact on what will happen in Poland, the actions of major central banks should limit inflationary pressures on a global scale, she added. According to Duda, monetary policy should be conducted in such a way that it both permanently reduces inflation to the NBP's medium-term target and allows economic activity to be maintained.